Welcome to the channel. So for today's valuation and computer modeling forecasting, we're going to be looking at LyondellBasell, a chemical company in the S&P 500. So first, we'll look at the valuation portion, and then at the end of the video, we'll go into the computer modeling. So let's jump right into it. First, to start off, this is a stock I've owned since 2020, ticker symbol LYB. You can see here I purchased kind of at the beginning of COVID in April when it really dropped $51, and I have been buying periodically since, most recently in May at almost $89. And you can see the growth of the stock during this time. So that initial purchase almost doubling, and the most recent one up over 11%. And in column F, if I would have bought the S&P 500 on those days, this is the growth I would have had. And you can see here, Lyondell has done a lot better than the S&P 500. And then take into account dividends, my overall return for the stock has been nearly 60%, 58.76. And if I would have done the S&P, it would have been 32. And down here, if you can see, this is the actual purchases in my account. I bought in 4 different accounts, a mix of brokerage and tax advantage accounts. And it shows about a 40% return just because that doesn't take into account dividends. So dividends account for a good portion of my growth in this stock, almost 18%, because they do have a high dividend yield. And last year they paid a special dividend of over $5 a share. So last year I got almost 10% return just from dividends. I believe their total dividend is somewhere between $4 to $5. Then you take into account the $5 special dividend. Last year did give a good return, and with my cost basis of $70.59. So with that, let's jump over to the actual valuation and looking at some of the financials. Moving on to the financials, and immediately I noticed not overly impressive, a lot of down years, which is what the red cells indicate. And even looking at net income from 2013 to last year, it's not up very much. 38.57 billion to last year 38.82. However, what really catches my eye here are dividends and shares. So dividends increasing steadily during this time, over 100%. Shares steadily declining, looks like nearly 50% in that 40% range. So these are the data points I like to see in a company, and this is what really interests me. Also, right here, return on equity. Pretty good values for a chemical company. 32, maybe that's about average, but 40, 60% range, that's probably doing better than majority of chemical companies. Yeah, it dropped in 2020, probably had to do with COVID, but again, right back up there, 55 last year, probably in that average range. But overall, real good with return on equity, showing that they can generate profits from what they have on hand. So another good data point. Let's scroll down a little bit and look at this on a graph. So here we go, a little easier to see now. Generally, I like to see more of these data points moving to the top right, showing steady growth, similar to revenue per share and book value per share, the white and red line, along with the dividends. However, like earnings per share, that has not been performing as well as I would like. Neither has free cash flow per share. So a little mix here, but I kind of feel it gets offset by the actual dividend growth during this time period and the share count declining. Also, as I mentioned, return on equity. See here, it's generally high. Yes, they had a down year here and there, but pretty confident that they keep it above the average for their industry. All right, let's go down a little further and look actually at the valuation. So over here in green, that's the discounted cash flow, but more importantly, the math down here. So intrinsic value coming out to just under $132, using a 85% margin of safety, that's coming to 112. So I know right off the bat, 85% margin of safety, so they don't carry a lot of debt. I like to see that. Also, what I'm using here for a short-term growth rate is 0%. So we notice at net income over the past 10 years, yeah, in between it's gone up, down, but from 2013 compared to last year, it's not much higher. It's only about 1% higher. So I'm using 0% over the next 6 years. Even if I change this 0% growth rate from 6 years to 10 years, so going out a little longer, we can see here the intrinsic value, though it does drop 125 with a margin of safety at 106. This is still less than what the stock's currently trading at, which has been kind of in the high 90s, like 96 to 98, $99. So even assuming no growth for the next 10 years, this stock is still trading below what I see as an intrinsic value with a margin of safety. And after those 10 years, the long term growth rate I use is 3%. Also, return on invested capital. Now, with those stock buybacks and dividends, they do a great job at returning capital to shareholders. Now, that gives them this growth grade of a D plus. Long-term debt to free cash flow, good job. I like to see under 3%, under three. They're at 2.49. Actual dividend growth has been 135% over the 10 years. Share decline, 42, 43%. And then profit margins, average over the last 10 years, a little over 10%. In the last 3 years, 8%. 8%. Though I would like to see that 8% a little higher. Overall, I felt this was a strong company to invest in, and it has been doing good, but you have to buy it at the right price. Now, at the current high 90s, those under my valuation, I probably wait until it dips below 90 again if I'm going to buy into it. That wraps up the valuation portion. So let's move on to the computer modeling to forecast the stock movement over the next year. So going to open up the wiki software, and we can see here I already ran the two methods, M5 rule and random forest, to save some time. And this past Monday, August 28th, 2023, see the far right column, that's the stock price. It closed at 97.34. Other columns indicate some data points for the company. And then also we have the index, which I use the SPY FTE, which is the second to right column. And scrolling down, you can see 1 year out, so August 26th of next year, it's projecting $139 per share. Now, M5 rule is usually very optimistic, so I try to offset that with random forests right here, and using the same data points, random forest out in 1 year of August 26th next year, actually a little negative, $93. So we're going to go over to Excel, and I like to take the average, and we'll compare that to the index projection as well. So let's move over or back over to Excel. And you see I already pasted the results for both the M5 and random forest, and we'll jump over to the graph. To the left of this vertical red line is the historical stock price for Lyondell, and to the right is the average of the M5 and random forest projection. So you can see here the blue is the stock value during that period for the next 52 weeks, and the orange is their percent change. And right now, the projection is showing a increase or a bull run late this year, early next year, followed by a little bit of a crash. You can see here going down to well below $90. So if this does pan out, this would be a perfect time to buy, and that's what I'll be looking for. And then it goes back up, ending the 52 weeks pretty positive. This is showing 20%. Possibly doing it, just looking at the historicals here, it was at 120 back in 2018. So very likely you can get up there, right here, high 19s in 2021. So very likely that it can reach those high teens, 120 range over the next year. Now let's include the index on top of this so we can compare the two. So we got the index stock price here in yellow. So again, everything to the left of the red line is the historical. This is for the SPY ETF, and everything to the right is the forecast for the next year. And I do have a video specifically focusing on the S&P 500. It's somewhat similar to this. And right here, we're showing a slight decline, about -2%, looking out 1 year. And so comparing that to Lyondell, right now, based on the valuation I have, depending if you want to do 10 years at 0% or 6 years, anywhere from a 106 to, I believe, 112 valuation, currently trading about high 90s, 97, $98. Uh, so looking here as well with a S&P kind of flat, maybe a little negative, and possibly a bull run for Lyondell. Lyondell to me still looks like a good value, especially if it dips like we discussed a few moments ago, kind of mid to like Q2 time range of next year. With that, I'm still positive on Lyondell. I am looking to hopefully add some more shares. They continue buying back stock and increasing that dividend. Companies that do that, you can't go wrong most of the time. Very well financially run, don't hold a lot of debt. So I think this is a good stock, at least for me, and type of companies I like to invest in. So hope you found this interesting and useful, and see you next time.